Hi, Sheriff Daramola is my name, and in this video we shall be taking a technical dissection of the USOil chart. Though we had this news at the beginning of the month that OPEC Plus members have decided to cut oil production, and which led to an immediate reaction of seeing a strong bullish gap at the beginning of this month. However, in the last couple of weeks right here, we saw our price action went into a consolidation phase, hereby giving us a sign that buyers have gradually lost that steam. And at this point, last week trading session witnessed a strong sell move to the downside, which we were lucky enough to take advantage of. Now we have a couple of questions to ask ahead of the new week. Is this all bearish momentum we are witnessing here turning out to be a retracement of that impulsive move to the upside to incite another wave of bullish momentum? Or is this going to turn out to be a huge sell-off in this market where price will drop further to the downside? And the third question is, how far, if this turns out to be a retracement phase, how far will this retracement go before that second wave of the bullish momentum will happen? And it's on this note I welcome you all to yet another promising session. Before we go into the details of what our expectations are today, I would like to share with you some key moments that we had during the course of last week's trading session before we move on into the details for this week. Now, for last week's trading session, it was quite an easy ride for us as we continued to sell the US oil right from the beginning of the week. We had this whole setup identified here where price action was trapped within that channel, and with a buy stop order and a sell stop order placed at the resistance and the support line respectively, we had our first sell position for the week triggered. And this whole move went on like this as price action continued to find lower lows and lower highs, giving us the privilege of adding more position to our existing trade. So it was quite a simple scenario here on the US oil as we continue to ride the move all the way to the downside. And not until the last trading day of last week that we begin to see some buy pressure resume just right around that $77 level, leading into a market structure that's looking more reversal at this point. And with a buy stop order above the $77.50 level, we had a buy position triggered at the on the last trading day of last week to give us a buy position, which actually gave us some couple of profit before the week closed. If you do want to have a look into how we took advantage of our trading opportunities last week, I will be dropping the link to this commentary in the description box below. However, if you are watching this from my YouTube channel, you will be seeing the link to this commentary at the top right hand side of your screen. With that being said here, let's dive right into the structure and let's look at things from an holistic point of view. Well, if you had been with me, you would realize that I'm still holding on to the previous setup we have here, just with some little changes in that regard, which we shall be discussing in a moment. Well, the first thing you would observe on this chart is the fact that price action has been bearish, at least since the month of July last year, giving us this beautiful bearish trend line you can see on your screen after we connected the series of lower highs in this market. However, during the course of last week's trading session, we projected how important that $82 level is, the structure around this area where price action finds a confluence at the $82 level and the bearish trend line, which happens to be an area that we wanted to be looking out for trading opportunities. So we were actually looking out for buying opportunity if buy pressure resumes above that structure, and if price action breaks down the $82 level, then definitely we are back within the sell territory, which gave us that privilege to be part of that bearish move to the downside. So at this point in time, like I said earlier, is the bearish move we have been witnessing here in the last week turning out to be a retracement of this impulsive move? And if it so happens to be a retracement of that impulsive move, how far will this retracement phase go before we start seeing an opportunity to join a trend continuation to the upside? So these are the things we are going to be looking at as we go on to dissect this current market structure further. Now, looking at the whole situation here, I'm going into the new week. I'm going to be holding on to the $78 area as my key level for this week. As you can see, that is where price action is currently trading, at least before the end of last week's trading session. So I will be looking at this whole structure here between the $78 level and the $76 area to decide what our next line of action will be. Will we have a consolidation phase within this area that might lead into a breakout of the $78 mark to incite the second wave of the bullish momentum, or are we going to be seeing a breakdown of that $76 level, which also shares a beautiful confluence with that bullish trend line? Let me show you that one in a moment. So that we have this trend line here, which has been a major determinant of bullish pressure in the market in the past. So will price action respect that structure to incite another wave of bullish momentum, or are we going to be having a situation where price will break down that structure to incite a sell-off? So with that being said, and with the information we have gathered here on the daily time frame, I want us to scale down to the 4 hours time frame, where we'll begin to see things more clearer. So right on the 4 hours time frame, this was what I was able to come up with. And the first thing I did here was to take into consideration what has been happening in this market since the mid-month of March. So price action has been bullish on this one, but things become a little bit interesting at the beginning of this month, where we saw our price action was caught within that range between the $83.40 level, which happened to be the resistant line of this flat channel, that is this whole structure here. Then we also have the support line of that channel sitting at the $79.50 level. And one remarkable thing that happened last week was the breakdown of that structure to emphasize the strength of the sellers at this particular point in time. Another thing about this whole structure regarding the breakdown of the area is the fact of how price action had transitioned into what looks like a descending channel here, which further emphasizes the strength of the sellers at this point in time. And with the breakdown of the bullish trend line here just a little bit, we had a breakdown of the structure right here on Thursday and Friday. And following the breakdown of that structure, we saw our price action was trapped within the $78 level and the $77 area. And based on this current market structure, the question at this point is, the breakdown we saw here on Thursday, is it a true breakdown, or will it turn out to be a false breakdown? And from a technical standpoint, whenever we have a breakdown of a key structure, just like the support line of the trend line that we have here, we expect that one point in time we might see price action do a retest of structure to incite another wave to the downside. So that is in the case if price action wants to continue the bearish momentum. However, if price action climbs above the $78 level, which happens to be our key level, and we begin to see buy pressure resume above the structure, where the appearance of this buy pressure signals that sellers are finding it difficult to break back below the $78 level, then at this point I will be considering a bullish momentum. And mind you, if a breakout, if the buy pressure above the $78 level happens and price action continues to find higher highs and higher lows, then you should take note that that breakout and higher lows there would have taken out this resistant line of this descending channel to give us a signal that this trend line may no longer be strong enough to hold bearish momentum. And if that is going to be the case, then we might be in for a reversal pattern. Then a further breakout of the $79.50 level will continue to bring more opportunities to add more position to our existing trade. So this is what I will be looking at going into the new week on the US oil. Be rest assured that I will be with you right in the comment section on Monday to give you an update on what I think will happen after price action is being monitored around this area during the early hours of the new week. I hope this video has been of immense help in making your personal decision on the US oil, and if it truly did, kindly support this project by clicking the like button. Thank you for watching this video, and I look forward to seeing you right in the comment section as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.